from 2000 to 2022, the gift that kept on giving for venture investors was application software. And I think there will be some businesses that find a way to price it based off of usage or based off of outcomes. All that matters is owning the customer. Think about that gradient of the systems of action, outsourced services, full stack services. Services businesses can be good businesses. In 2021, Series A prices were between 40, 60 posts, and now in 2025,
it could be a seed.
Yeah, that could be a seed.
Des, welcome to the podcast.
Thanks, Jason. Thanks for having me on.
Yeah, let's do a quick intro. We'd love to just learn more about your background, learn more about Firstmark.
Yep. So my name's Des. I'm a principal at Firstmark. Firstmark is an early stage seed and Series A fund based here in New York City. Love backing and working with founders based in the city, but also work with founders who are based in Europe. We invest globally, but also have a practice dedicated to backing founders that are based in Europe and thinking about starting their first office in New York City, expanding into the US, building out their go-to-market sales teams, etc. My personal background, I grew up in Texas, played basketball competitively, got recruited to play at Cornell. So that's how I ended up in New York. So graduated from undergrad and did what a lot of people do. I started out in consulting. Hated my life as well. Consulting was not for me. So then I transitioned into startups. I worked at a great startup called 𝐃𝐨𝐧'𝐭, which had a ton of phenomenal people, and that was kind of my on-ramp and exposure into the venture ecosystem. So now have been here at Firstmark for 4 years now, and I think you and I met probably
A couple years ago?
2 years ago?
Yeah,
I don't know, time flies.
Yeah, truly. Cool, well, this is something you've written about a couple times. Tech's moving from systems of record to systems of action. That's a big statement and implies the old SaaS playbook is done. What's the clearest signal to you this shift is already happening? And what does it mean for what we call a great software company now? Yeah,
so the way I think about it is I've been covering fintech and vertical SaaS since I've been here at Firstmark. I think around, honestly, 3 years ago, everyone had this kind of ChatGPT moment and thought about, hey, what does ChatGPT mean for me? For me, over the progression of learning more about AI, observing how things are changing, how I've thought about things is really basically from 2000 to 2022, the gift that kept on giving for venture investors was application software. How I think about the world was basically you have businesses like a Salesforce to start, then you have businesses like Veeva Systems, which are built on top of Salesforce, and then you have businesses like Toast, like Procore, like ServiceTitan, all coming after that. What I mean by the shift from systems of record to systems of action is you're no longer going to have software assets that are really just focused on capturing data and then displaying that data for people and storing that data. You're now going to have software systems that are focused on basically collecting that data, actioning against that data, and completing actions for people. So when I think about, what does ChatGPT do? What is the clear signal? This is a business that has gone from 0 to 13, 14, 15 billion of revenue in a 3-year period. That's a fundamentally different world that we're living in. And then the signals that I see, especially at the seed and Series A stage, especially here in New York City, is now there's this new cohort of builders who aren't creating these CRM or ERP type platforms. They're creating platforms that are using voice as a medium to interact with their customer. They're creating platforms that don't even have logins. It's just automating email back and forth for their customers or the kind of constituents within their workforce. They're doing the same thing over text. And what I'm seeing is this kind of new evolution of software products, whether that's across the auto vertical. There's businesses like Thoma, like Mia, like Pam, whether that's across legal services, which we all know, that's like Legora, Harvey, Wordsmith, or financial services, Rogo, Heavia,
Finch,
all of those guys, right? So that's how I kind of see the world changing, where it's the focus is no longer on let me create a neat UI on top of a database. Let me actually have this intelligence layer that sits on top of the LLMs connects into your workflows. So it can connect into your ERP, connect into your CRM, connect into your email, and then actually do tasks on your behalf, whether that is like fully autonomous, run in the background, or done in like a semi-supervised manner. So, Jason, wake up, what are the 5 most important tasks for me to do on this Monday morning? And you log into that, and then you see, oh, okay, it's pre-drafted the emails for me that are pertinent to my 5 most important accounts.
It starts to take actions for you, so it's beyond just displaying data. It's like, here's the path forward, here's the next thing, like digging a little bit deeper.
Yeah, I think it's almost like, sometimes I joke with my friends, I'm like, look, I've got, we're anthropomorphizing a little bit, but ChatGPT is like the smartest, most patient person I know. And like, you have this literal genius that sits in your pocket and is willing to teach you and do anything for you. And so what we're seeing with these systems of action products is they're applying that, but in the business context. Like in the consumer context, it's like, okay, hey, I want to learn about the Revolutionary War and the Boston Tea Party and stuff like that, and it'll spit it out, boom, instantly for you, and then you can remix it how you want or however is best for you to learn or ingest information. What they're doing in the business context is saying, again, hey, I have 5 accounts. What should I do against those accounts? How should I draft the email? How should I reach out to them? What is also the context that I should know in terms of what I'm going to say in those emails? And that sounds like pretty basic and rudimentary, but you can see how that initial kind of wedge in for those businesses can ladder up to them doing increasingly, let's call it more complex scopes of work on your behalf, as well as it turns, especially like junior staff members within the organization from like preparers to reviewers. So it levels them up, and it also gives any organization more leverage.
I know the analyst job. Everyone talks about that. It's like the analysts are getting replaced, especially big financial firms. So a lot of that grunt work getting just like solving all that for them. And then maybe that's like, okay, like what are the actions that we can take with this data and information?
Right, totally.
You said AI companies look more like payments companies. SaaS usage-based, lower margin, less predictable. That's a total rewrite of venture math. What's the new metric to qualify if ARR stops being the standard?
Yeah, I think I'm of 2 minds of this. I think if, to your point on venture math stop being the standard, it's more about like the tradition of like, all right, software is going to be 80% gross margin, 120, 130% NDR, we're going to have our triple, double, whatever it is. Where I think the first order thing that needs to be solved is like, all right, is like a SaaS or membership-based model or like a subscription-based model, is that the best thing for AI products and the AI businesses themselves? Like everyone knows, like all of these businesses are losing money. And that's partially because everyone has unlimited usage for the most part with these products. Like,
how do you gate it?
Yeah, if you're on the ChatGPT $20 a month plan or even the $100 a month plan, there are power users that are absolutely bleeding money for these companies. So that makes a question of, okay, how do you price that for them specifically? But where my perspective comes on like are these AI platforms a little bit more like fintech and payments businesses? It's still like a rough thought and outline in my head, but my sense is these businesses aren't going to be terminal 80% gross margin businesses. I think they're going to be more 50, 60% gross margin businesses, again, like fintech platforms. And I think there will be some businesses that find a way to price it based off of usage or based off of outcomes. So those are rough thoughts. I haven't seen a ton of people price it in that manner today, just because ChatGPT set the standard with the kind of subscription-based model overall. But that's really my perspective. Now, what is the metric that I think I'm starting to care about more? I think there's a lot of noise in the margin structure of these businesses, again, because you can be underwater, but venture investors are willing to take the trade-off if they see the growth. I think probably the main thing that matters, it's like paying more attention to like usage of the products over time the complexity of that usage, and then also like the raw amount. So like what I would think about if I was a founder, what I would want to do if I was raising a Series A round, I would think about preparing my data room, basically having some rough proxy of like inference per user per month. And I think what investors will care about is, hey, is that a steady state line? Is that a line that grows over time, or is that a line that decays? Obviously, if it's a line that decays, you're in a bad spot. But if that's the type of line where it's like, hey, I see you go from having on a user or on a cohort basis, you know, from 2 to 4 to 6 to 8 to 10 to 20 queries of inference every month, like that's probably a good sign. And obviously like that's the lowest common denominator of like usage in your product. The other ways to like frame that would be over like, let's say you're like a AI tool that is powering email automations, whether that's internal to your team or external to like a customer or a vendor or something. Like that's another proxy for usage that I think people will care about. And the challenge is like, you know, there's kind of a cap in terms of how many like emails you can send per month, depending on the industry or the relationship. Like you're not gonna, if you have a finite set of vendors, you're not gonna like send unconstrained amount of emails to your vendors in order to get something done.
Yeah. The companies that are doing both, right? Like what about the companies that are doing annual contracts plus usage based? Like are those companies going to win?
Maybe, right? Like I think that's
Is it a combo?
I think that's open for debate,
model?
right? Like we've seen like overages as an example of like saying, because the whole balance to me is that like investors crave predictability, and the benefit of like, you know,
Contracts,
a typical SaaS 12-month contract is like, I know what I'm going to get paid at minimum
Who's
every
renewing?
month.
Yeah.
Right. And when are they renewing? But like, you don't want to get upside down on those unit economics. So if you can find a way to align yourself with the customer where it's like, when you're using this thing, it's delivering outcomes for you, but obviously like you got to pay for that. I think that makes sense for most people, but like you don't want to fully over-rotate if you're a founder today to like the full outcome-based thing, because it's so hard to measure.
It's
like
hard,
if I was saying, hey, you know, I want to deliver 100 leads for Row next month using my AI tool, and there's also like different ways I think about these businesses in general, but like, let's say I'm a traditional like software business where you're using it, right? Like, how am I going to get back the data that I got you those 100 leads, as well as like, at what timeline are those 100 leads going to come in?
So many more variables. Can you convert the leads? Like there's so many more data points that have to be into it to be like a perfect world scenario.
Yeah, and all the while you're using my product, and there's still costs with it. So like, all right, what are we doing here? You know, like. But I do think one of the ways I also think about this, and this is me ranting a little bit, so I hope that's fine. But one of the ways I think the world will shake out is I genuinely believe there's like 3 types of AI native businesses in the marketplace right now. I think there's these like what I call systems of action businesses. So these are the businesses most akin to like a ChatGPT. They're like assistant like products, like co-pilots. And this is where I would put something like a Harvey or a Rogo in those. Then there's these businesses that are like this outsourced service. So they take a very like defined scope of work, and these businesses can kind of deliver based on like outcomes, but they take a very like defined scope of work and they deliver an output for the business user. So we actually made an investment in this business called Henry AI, and what they do is they leverage AI to basically create automated. They automate 2 things, basically the broker opinion of value and another kind of the offering memorandum for commercial real estate investors. So if you're a commercial real estate broker and you are selling your building, you have to create both of those outputs in the process of recruiting both the buyers and the sellers. And what Henry helps those commercial real estate brokers is say, hey, don't spend your time and resources on doing that. We can do it better and more efficiently for you. Just throw it over the fence to us and we'll make sure that you get a good output back. There's a little nuance there because they have a design editor too, but like the general premise is let's take this defined scope of work and use AI to automate that process. That's like the second type of business I see. The third type of business that I see, and I think this is the most rare, and you kind of mentioned one earlier, �CRosby, there's also these businesses that are kind of these full stack AI native services. So �CRosby is one example of doing that in the legal services context. OffDeal is another example of that, doing that in the kind of investment banking context, particularly focused on like lower middle market SMB type businesses who aren't necessarily
Volume.
Volume game, and not going to be, Morgan Stanley or Goldman is never going to knock on their door.
Yeah.
The 𝐾𝐭s, the Bairds, et cetera, might.
Yeah. You've written AI still struggles with last mile value delivery. Where does that value actually accrue in your view? The models, the apps, the connective layer that turns intelligence into outcomes?
I believe that will accrue in two areas. I believe that it'll accrue to the foundation models. And I'm thinking about it persistently over time. Like right now, where is it all accruing? It's accruing to the chip layer. Over time, I think the majority of the value will for sure, or let me rephrase that. A lot of the value will accrue to the model layer. And then I think there will be 1 to 2 winners, depending on the size of the market, at the application layer. And I think a lot of it, like a lot of investors like worry about the size of these TAMs, but I think where it's shaking out is there's always going to be a player that is the enterprise focused in the space, and there's going to be a player in the space that's focused on the SMB players in the space. So you could say it's going to be a Salesforce and HubSpot dynamic. Or again, in the legal space, you could say, hey, who's going to focus on the large law firms, the Cravaths, the any of the kind of big white shoe law firms, and who's going to focus on the in-house legal counsels. Both of them are lawyers. Both of them have workflows that can be augmented or automated with AI, but they have different workflows and they're different go-to-markets. And there's a lot of noise in the ecosystem when you look at those things, but I think those kind of, to my point around the last mile, I think the product experiences that you have to build for them are different enough to where you can have 2 players. And then my also general thought on the last mile of AI is like, not to put either of us on the spot, but like how embedded is it in our workflows today? Like I'm probably somewhere between a DAU to a weekly active user of ChatGPT, but it's not like out of the 8, 9, 10 hours a day that I work, or beyond that, depending on the week, that I'm in there like 4 hours a day, right? Like it's very good at getting you the information you need, but it's also like, hey, there's a lot of additional leverage that I could have. And again, shouting this out into the void, but if someone was building an AI native workflow and tool for venture capital specifically, it might not be a venture returns business, but there's certainly more automation that can come in my kind of day-to-day workflow.
Okay. We're seeing a wave of hybrid service stack startups, AIs plus humans, not pure software. Do you see that as a future defensibility or just a temporary bridge until the tech catches up? And what kinds of founders are best positioned to build in that in-between zone?
I think the best, this is like a little bit of a random idea, but I think the best example would be someone who has lived the experience of the customer, just so they can speak their language and they have credibility.
You have to know the buyer.
You have to know the buyer, but the buyer also has to trust you a lot. Like within the tech ecosystem, like developers selling to developers is like, it's not easy at all, but like the best developers know who the other best developers are. And they're like, oh, XYZ guy, like I trust him. I've seen, the projects that he's worked on. I've maybe wanted to go work with him, or maybe he tried to recruit me in a past life. I trust him to deliver X. I think the same thing occurs in any other industry. So let's take something super far afield. Let's say something like the agricultural products and industrial farming here in the US. Like, if you were a founder that wanted to go build a product for farmers all throughout the country, like, if you're sitting here and you've only lived your life in New York City,
If you're in New York, it's not going to work.
yeah, it's just not going to work. They want to trust you. They want to know that you care about them. And so I do think I hear this a lot. There's sometimes that like personal resonance, maybe like your family grew up in it, or maybe like you had just had a
What's your story?
What's your story,
Why are you
right?
doing
Like maybe
this?
you're a third generation farmer and then you went to XYZ name brand grade school, or maybe you didn't. Maybe you found your way into tech but really fell in love with it, but you want to get back to serving this constituent group that you really know. Like, I do think that matters. And then to the point on like full stack services, the differentiation, whether it is like enduring or not, like I'm super biased, and this will sound super simple, but like all that matters is owning the customer.
Yeah.
Like if you can find a way to own the end customer, and that's what I think about that gradient of the like systems of action, outsourced services, full stack services. It's just this gradient of consistently owning more of the experience or the end-to-end workflow with the end customer, right? Like if I'm selling a product to Row, I'm obviously not monetizing the core banking product, right? With your end customers. You guys have the full stack service.
Correct.
But, and then if I only help you all, generate marketing assets, right? I'm only getting a percentage of the total value of the end customer. And I think what you're seeing now in the AI era, because there's already a lot of software assets that exist, and because it's getting easier to create software, people are like, okay, like where is the wedge that I come into here? Like people don't really want additional apps. Yeah. Like that's
everyone's
that's my
converging
bias.
on the same stuff.
Yeah.
Yeah. When
So-
the customer continue to build out the software to serve them, if it makes sense, as long as it's not like too far-fetched.
Yeah, as long as it's not too far-fetched, but even if it is, like I think, like I would not be surprised if 3 years from now, people start to build out that last mile of like product delivery and surface area, to where if you are, let's say, what would be crazy? Let's say you want to, like, this is genuinely crazy, but like let's say you want to run the largest set of franchise, I don't know, ice cream stores in the country. So like there's some software dynamics in those types of businesses, but that would not be a venture business. So let's take that out of that context, but let's just say, like, could that be a good business or a better business than it is today, right? Like in that business, you still have to do a ton of stuff. You still have to run your finance, you still have to operation, you still have to run your sales, you still have to run logistics, all that type of stuff. You could see a world where there is an AI native workflow for each one of those kind of functions within the business, but you could also see a world where someone just wants to vertically integrate everything into one organization. Mm-hmm. And like that's going to be a very specific entrepreneurial choice. Like very few people are going to be like, yeah, I want to be the like ice cream magnet of the United States, but like
easier now.
But easier now, but I also think that's just straight up where there's going to be opportunity.
Yeah.
And again, that's not like a venture context like business, but it is the type of thinking where maybe what could be a venture context business is creating that operating stack to where it's like, people have talked about this in the past within fintech, where it's like, okay, like what's the business in a box that you can create for people? And maybe the business in the box is like a franchise like product or something like that.
I mean, I remember when we were selling into private equity and like doing middle market stuff, and you'd meet someone who's like wearing jeans and a vest and like boots, that's trying to like, win the hearts of lower middle market companies in the Midwest.
Yeah.
Versus someone who's wearing a suit and tie that's buying something corporate in New York or like California.
Right.
It's like, yeah, that personal trust is like, that's important. I mean, if you're dealing with like human to human.
Yeah, and it's also like, there's so much business not done in the coast, right? Like people, I won't say the name of the company, but there's a really interesting company that just relatively recently got a round done, and they, sell to like industrial distributors and manufacturers. Like people, when I talk about the last mile, it's also those industries. People haven't, when you think about a system of record, like one, those systems of record already exist for that category, but two, like people haven't wanted to necessarily innovate within those organizations, just because it's like the delta of what you could create between what exists and a new product, like the delta of experiences is relatively tight. Versus if you can come into them and say, hey, I'm going to create this product that is going to be always on for you 24/7, and make sure that you never drop the ball again with managing your vendors. And by the way that you make money off your business is making sure that the vendors send you stuff on time so you can go resell it to your customers, right? Like, oh, that's a little bit of a, wow, that's really interesting. And then the kind of like no-brainer for people is like, oh, and hey, this is going to be at a fair price and fair value to you as well. It's like, okay, cool. Like those are the types of products that pre-2022 just fundamentally not possible and didn't exist, at least from my perspective. Or if they did exist, because there are some examples in accounting, like Pilot, they were too reliant on people to deliver the end service for the business.
When you zoom out, what's the through line in everything you're watching? The next single shift you're betting on for the next 5 years, and what would have to happen for you to abandon that?
Ooh, great question. This a lot of what I'm betting on is that, like, let's call it again, from 2000 to 2022, application software was a gift that kept on giving. Let's say, I think we might be in like the year 2001 right now in this period. So I think there's going to be another 20-year period where you see these systems of action continuously get founded and started and grown to become really big businesses. And I think especially as the foundation models continue to improve over time, there'll be new feature sets that people grab onto, whether it was like the GPS with mobile or other interesting things that you can say, oh, now I have this intelligence solution, but now there's this other solution I can pair with the intelligence solution to create something net new for an end customer. That's fundamentally what I'm betting on. So I think even though venture markets are certainly getting incredibly competitive very quickly, it feels like people are attempting this like king-making type activity where like one player merges in the ecosystem and someone's like, boom, $100 million into it. You're like, whoa, like how'd that happen? Like, interesting. Congrats to them, but interesting. I think even though that dynamic is occurring, I don't think that this time period is going to become so compressed, right? Like I think you do have multiple years to make these investments over time, as well as if you're a founder. Like fundamentally, it is still incredibly early. Like it can feel like on the outside looking in that you're like, oh, like you look at legal and like there's like 8 of these businesses, financial services, like 8 of these businesses. But I still think there's a lot of opportunity. So to what would make me like lose that conviction? Like, I don't know, like maybe the foundation model stops scaling. Maybe like something occurs at the chip layer. I'm not entirely sure. I think I'm like I've kind of like burned the boats in some sense. I'm just so high conviction on this being where the future is going.
Yeah, I would agree. I mean, I feel that way in fintech too. It's like, years go by and then you're still like, okay, we're just getting started. We're just still chipping away at all these different areas of opportunity.
Right.
Espresso around a little bit faster. What's one view you hold about the market that most investors would disagree with?
That services businesses can be good businesses. Most investors would be like, that is stupid and dumb. And I think in the fullness of time, a lot of the businesses that emerge out of this ecosystem are going to look a lot more like traditional services businesses with higher margins than they do like a traditional software business.
Because they're integrating both. Software and services.
Yeah, because they're integrating both. You're still going to someone still has to sell and someone still has to deliver the like client experience, but I'd be really surprised if it's just like, seat-based expansion left and right in this paradigm.
What's one conviction you've completely rethought in the past year?
Oh, great question. Conviction I've completely rethought. I don't know how else to frame it outside of continue to keep a very open mind in venture. Like, it's given the volume of companies that you can meet, as well as the failure rate. Like, there's a lot of loss in this ecosystem. Like, things, especially early,
super early. All the accelerators, incubators, like the volume seems to be crazy.
Yeah, it's super high, and running any business incredibly hard. Running a venture-backed business doubly hard. So I think assuming that you know exactly what is going to happen, and maybe ossifying around a few beliefs or like a standard set of beliefs, I think is something I'm trying to rewire. Because obviously there's pattern matching, and you hear that within venture of how that's like a skill set to develop over time. I think you also have to have a little bit of like a child's mind and approach to this of just being excited. Like, okay, tell me more. Tell me what's new.
Throw
what
the
are you
playbook
doing?
out. Like, just be open to starting fresh.
Be open and start fresh. Yes.
What's the risk most of venture is sleepwalking past right now?
I think that pricing still matters. That's probably like the overarching risk that I think most of venture is. And look, this is part of the bias of my team and how we think about it. We think pricing matters. I think the other component would generally be that if you aren't, like, I forget who said this, but like venture is definitely like a sins of omission type business. And my sense is that the vintages of venture funds from 2024 to 2025, 2026, certainly 2023, they're going to be very good. And this is a period of time where you want to be deploying capital. And there's a tension there, right? Like, you want to be deploying capital, but you don't want to be doing it at like crazy prices that like are basically like call options on like a founder's life. Like, I don't think that's good for anyone. I don't think that's good for the ecosystem. It's not good for investors. It's not good for operators who are also the lifeblood of this ecosystem too. So that's where the tension is around, like, I think one of the risks that venture investors are making, because partially we're the problem. Like, people get so excited and competitive, and
Rounds
it's like,
get expensive, they get out of hand.
They get out of hand, and because people want to win deals and they have deal heat. But I think that is like, it's a really tough tension, because like VCs sometimes will be like, you can only lose one extra money, right? And I don't mean to be flippant about that. Like, it matters. You have a commitment and relationship with your LPs, and you should be deploying capital in a very thoughtful manner. But at the same time, you're paid to take on risk. And so if, in 2021, Series A prices were between 40, 60 posts, and now in 2025,
it could be a seed.
Yeah, that could be a seed. And Series A's are like, I don't know, dude, 80, 120, 150, like, you're just in a different world. So I do think what, as an industry, the industry will be fine. There will be absolutely massive businesses and winners. But I do think that's a risk, the level of like, I don't know how to frame it, like price competition or inflation in these assets can be, it's gonna hurt for sure.
$6 to $9 million seed rounds. It's like,
what are we doing?
Like, is it because there's so many more funds and people want to get more investors in because it's more helpful on their cap table, right? They have marquee funds. No,
I think it's just funds are bigger.
Yeah. So they have to. You're getting pushed to deploy more.
Yeah, you're getting pushed to deploy more. If you have a $1 billion fund or $2 billion fund or beyond that, like, you got to put money out the door. And then there is the whole like, everyone ratchets earlier in the process too. Yeah. So if you're
B is the new A is the new seed.
Yeah. So it's definitely, I only have my frame of reference, my frame of lived experience to go after. And I also think in the fullness of time, like when you think about post-internet venture, for sure the number of funds was much lower as well. So by definition, there was just less capital too. So, and then also there's like, there's a whole other like, how much were LPs institutionally allocated to venture? I think that maybe started in like the 80s. So I don't know how the percentages changed over time. But I think there's a lot of factors at play because still at the end of the day, I'll use OpenAI as an anchor point, even though it's like obviously complexity in it. Like, I don't know, this is a $500 billion, this business is marked at $500 billion right now. And all of that value creation has occurred in private markets. So like clearly like venture still has the capacity to work and create these power law outcomes in businesses. And, whether you believe in the like system of action thesis or not, like I think anyone in venture would, if you ask them like, hey, like, are there going to be multiple 10, 20, $100 billion companies that get founded in the next 2-3 years? People would be like, yeah, for sure. Like no hesitation. At least that's my view. And maybe that, I don't know, maybe that'll spark like a Twitter war and people are like, like Des, you're an idiot. But like,
I love it.
That's my perspective.
Yeah, it's great. Who's a company or a founder you're excited about and why?
Some people like to stay in stealth. So who's a company? This is a company I have no relationship with, entirely view them from afar, but I do think what the physical intelligence team is doing is super, super cool. Maybe it's consensus in San Francisco. I don't think it's consensus here in New York, but if you thought about like, where are the two next legs of asymmetry? And these are not areas that I like actively invest in. I like, curious, so I dabble. But if you had to tell me or ask me like, okay, where are the two next areas for like asymmetry within venture markets? I would say robotics is one, but probably like rapidly converging where there's going to be a lot of talent and capital that focuses on the space. And the other one is just like objectively space. I think as like, the cost to launching satellites and payloads continues to decrease, like people will increasingly find more and more commercial opportunities there.
Government opportunities as well, like that's kind of converging.
100%. And I also think there is like an I think this is important. I don't know how many people execute it well. I do think there is an element of, everyone's life is precious. I think there's like a, some HBS tradition where they ask every student, what are you going to do with your one wild and precious life? Something to that effect. And I do think choosing what you work on or the problem that you choose to solve can attract, that influences the quality of people that you attract.
Yeah.
So if
the purpose of your business.
It's the purpose of your business. So if you're saying, hey, I want to create, making it up, I want to create space centers in space that are dedicated to complex clinical drug trials.
Yeah.
That's going to attract some really
you can
smart
get a lot
people.
Of people excited about that.
You're gonna get a lot of people excited about that. Versus, and this is no shade on it, but like versus, email automation for SMBs. Yeah. Like, dude, great businesses. I love them. I think they're awesome. They're gonna make money, but they are fundamentally like different missions.
You're gonna attract different people. It might be hard for the smart people want to do hard things. I believe.
Yes, agree.
Yeah.
So those are. I mean, again, physical intelligence. I think is super cool. I think there's another like robotics company that's probably gonna, I don't know when this will release, but like announce something tomorrow called Sunday Robot or Robotics.
The lawnmower company?
Not a lawnmower company, robotics company. And they're like they're also like creating like, best way to describe it is like playful looking humanoids. So not like fully like 6 foot tall robot walking around my house. But I think like they're getting the the mechanics of the robot to do like things that are pretty complex.
Like fingers, like using hands. I know.
But
That's
it's not. It's not like the robot doesn't have like dexterous fingers. You know, it's like almost has like clamp type things. It sounds weird.
Do you want a robot in your house that looks like a person or R2D2?
I don't want a robot in my house. I'm just out. Like, no, I don't want that. But I think it's cool. And also, like, unless these things might be like 10 grand, I'm not paying for that. It's not for me.
Yeah.
But I do think it's cool, and I think it's really cool tech because it's like basically the clip they had was like showing a robot basically. I assume it's not teleoperated. I assume this was autonomous. Basically showing a robot grab like 2, I think, empty wine glasses.
Ooh.
And you think about a wine glass, you're like, wow, dude, how did you train a robot?
I have trouble with that.
So that's my, those are the companies that I think are interesting and cool. And I'm certain, you know, again, in the next like decade or something, people will build big businesses there too.
Yeah, it's exciting. Awesome. Love it. Well,
Yeah.
that's it, man. Thanks for coming on.
Yeah, of course.